Last week marked one of the most exuberant phases in crypto markets in months, with many major altcoins surging sharply. Industry reports noted that Ethereum was about to test the all-time high at $4,868, and it jumped roughly 19% over the week. Likewise, Cardano broke above 90 cents and briefly touched $1, clocking in approximately 20% gain. Solana repeatedly challenged the $200 barrier, returning approximately 13% weekly. And even smaller tokens like Hyperliquid's Hype climbed about 20%, approaching its all-time high near $50. In short, a broad swath of the altcoin market has caught a bid, pushing prices toward key highs that had not been seen in years. But with this bullish fervor comes intense volatility and risk. Every rally can be followed by a retracement, and as we will explore, the same charts that project huge gains can also hint at sharp pullbacks if the breakouts fail. In this analysis, we examine the main coins driving the rally: ETH, XP, ADA, SOL, and HYPE, dissecting both why the upside looks promising and what dangers lurk beneath the surface. Of these moves, Ethereum's recent breakout is a prime example of the double-edged dynamic. For the first time in 4 years, Ethereum ETH is closing in on its 2021 peak around $4,868. The last week saw a near 20% jump, fueled by an influx of investor enthusiasm. Factors cited for this rally include strong demand in Ethereum-based DeFi NFT platforms and optimistic macro signals like hopes for US rate cuts, which have drawn big money into crypto. Technically, ETH has now pierced through the $4,500 resistance zone and is flirting with the $4,900 $5,000 area. Many analysts argue that if Ethereum can turn that $4,900 $5,000 region into a new floor, it will effectively enter price discovery above old peaks. In such a case, initial upside targets include $6,000 and $7,000, with even $9,000, $10,000 mentioned by the most bullish forecasts. The mindset is that breaking the old ATH removes any cap on price, and a short squeeze of leveraged bears accelerate gains. For instance, Coinpedia points out that a move above $4,872 would liquidate billions in shorts, potentially igniting a cascade of buying that drives ETH far beyond its previous record. In this scenario, the race is on two higher prices, with momentum traders piling in and fueling further upward thrusts. That said, the charts also warn of severe pitfalls if the rally falters. Ethereum's upswing has been so steep that many traders are booking profits, and key supports lie not far below. Coinpedia's technical analysis shows $4,500 as a critical short-term anchor. A break below that could expose the 38.2% retracement level near $4,144, and a more serious correction, even down to $3,760. In other words, if ETH fails to hold the mid-$4,000s, it risks undoing much of the recent rally. The resistance just above current prices is also very tight. Roughly $4,878, $4,891 stands right at the previous peak. If the bulls cannot convincingly break this zone, Ethereum could get locked in a volatile tug-of-war, or worse, form a double top and roll over. In fact, analysts caution that a false breakout into this area might instead become a fake-out trap, triggering a swift downside reversal if buyers lose their nerve. Even broader factors could spoil the party, should macroeconomic conditions worsen, or a Federal Reserve policy turns out less dovish than expected, risk appetite could wane and pause the rally. Put simply, Ethereum's chart is bullish but extremely extended. Only sustained demand can justify chasing new highs, and any stumble near $4,900 could unleash one of the feared liquidation cascades that analysts have highlighted. Ripple's XRP has followed a very different pattern amid the recent mania. XRP was virtually flat to down last week, failing to clear the $3.20 level and ending around a 6% loss, even as other coins rallied. According to market observers, this underperformance stems in part from XRP's earlier leg up in July, which has left its current buyer sitting on profits. With momentum lacking, investors appear to be redeploying capital into faster-moving sectors: Ethereum, Cardano, etc., leaving XRP caught in neutral. Crypto Potato notes that as long as XRP holds above roughly $3, it has a good shot at rallying later once money rotates back from other tokens. Thus, the immediate opportunity for XRP bulls is simply to maintain the $3 support line. If this zone holds, it could become the foundation for a rebound, potentially triggering a catch-up move once broader fear of missing out FOMO cycles around. Indeed, some traders argue that investors who exited XRP in recent weeks may return if they see altcoins continue higher. In the best-case scenario, flipping $3 into firm support would allow XRP to resume an uptrend, perhaps retesting its mid-year highs. However, the downside for XRP should not be ignored. Technical analysts are now watching $3 like a tightrope. Market Pulse's detailed chart analysis finds that XRP has formed a lower high pattern, and that $3 sits at the convergence of a rising trend line and the round figure self-fulfilling. If $3 gives way decisively, the outlook turns bearish. Specifically, studies show that a break below that level could quickly send XRP sliding toward the $2.40 area. Contributing to the bearish thesis is a recent flurry of worrying reports. A prominent XRP ledger validator released data suggesting unusual large volume trades on exchanges, hinting at wash trading or manipulation, while not proof of anything illegal. Such allegations certainly fanned fear, coinciding with the sell-off. In practical terms, the combination of technical weakness, bearish engulfing daily candles, momentum indicators turning down, and potential market credibility issues means XRP has more room to fall than to run in the immediate term. Put another way, bulls need to clear the nearby resistance zone around $3.20 and above to regain confidence, and hold above $3 to avoid triggering a sell cascade. Until that happens, XRP's primary trend looks sideways or slightly down. Any rally will therefore depend on renewed positive catalysts such as firm regulatory news or macro tailwinds to overcome the current inertia. Cardano's ADA, by contrast, has been on fire lately, but here too, we must temper exuberance with caution. ADA broke through long-standing resistance at 90 cents and nearly hit $1, translating to approximately 20% weekly gain. This was no minor pullback, signaled a broad shift in sentiment. On-chain metrics support the view that real interest drove this move. Daily active addresses spiked to over 42,000 in 24-hour. Trading volume surged past 2.2 billion a day during the rally, suggesting genuine participation rather than thin buying. Analysts have quickly raised new upside targets for ADA. For example, Crypto Potatoes charting shows projected resistances around $1.13, $1.31, and 1.54 levels tied to past swings and Fibonacci extensions. In fact, some technical strategists argue that if ADA can firmly flip $1 into support, the path clears toward those targets, with $1.30 being the next major hurdle. Combined with rumors of increasing institutional interest, for instance, Grayscale has quietly set up a Delaware trust for ADA. The case for ADA possibly doubling from here has gained traction in certain bullish circles. Yet we must emphasize that a 20% move in a week is rarely sustainable without a back and fill. Crypto Potato specifically warns of a key caveat. If ADA fails to hold above the breakout zone, all the upside would be at risk. Chart analyzers note that a drop back below roughly 80 cents would invalidate the recent breakout and likely send ADA lower toward support clusters near 55 cents, 60 cents. Levels that saw buying earlier in the year. In other words, the surge has left ADA technically overheated relative to where major support now sits. Any sudden shift in the market, for example, a rotation into Bitcoin or a news catalyst affecting Cardano's fundamentals, could trigger profit-taking. Traders should also watch for classic exhaustion patterns. If buyers start to stall just above $1, it could usher in a steep pullback. On balance, Cardano's setup is bullish but precariously so. A strong rally is underway. But the safe path forward depends entirely on continued buying pressure. Without that, last week's gains could evaporate as quickly as they arrived. Solana Sol has written a similar tale. Solana bulls tried twice to keep price above $200 this week and only narrowly missed. But the cumulative effect is that Sol closed up about 13%. The technical structure is encouraging. Sol has formed higher highs and higher lows, maintaining a clear uptrend. Recent analysis from Brave New Coin notes that Sol has effectively reclaimed the $200 level, resulting from a sharp approximately 14.9% intraday surge. Holding $200 would be a powerful psychological and technical win. In fact, analysts say that staying above this mark could unleash another leg up, possibly targeting the $250, $265 range as the next focus. Furthermore, on-chain data provide a bullish backdrop. Solana's DeFi ecosystem is thriving, with total value locked TVL climbing to a 3-year high. 1x Twitter analysis shared by Brave New Coin shows Solana's TVL surging past 50 million SOL, its highest since 2022. An indication of growing usage and liquidity. When such fundamentals align with price momentum, the technical odds tilt positive. Additional indicators are also flashing green. Solana's trend has alpha trends turning bullish in major moving averages. 20/50ths, 100, 200 stay EMAs now aligned, suggesting strong institutional buying and continued upward momentum. Simply put, a sustained breach of $200 could send SOL rapidly toward the next resistance walls at $216 and $227. Nonetheless, risks lurk here as well. Analysts note that until SOL finally breaks above $200 convincingly, every failed attempt leaves a weaker foundation. Brave new coin highlights $216 and $227 as critical barriers. If the rally stalls or a pullback occurs, we already know where the safety nets lie. Roughly $186 is cited as solid near-term support. A failure to hold $186 would be a major red flag, potentially ushering in a deeper retracement toward the low $160s or beyond. We should also recall that Solana has faced platform outages in the past, and any future network hiccup could quickly erase bullish enthusiasm. In sum, while Solana's charts look strong, traders should remain aware that twice analyzing $200 without success might lead to frustration, and any retest of support should be monitored closely. A break above $200 with volume would be very bullish, but a breakdown under key levels would reverse the trend narrative. Finally, we arrive at Hyperliquid token, the altcoin story that has captivated some of the wildest swings in recent weeks. HYP has quietly been on a tear. It surged roughly 19% in 1 week to about $48.57. Placing it just approximately 1.1% shy of its all-time high $49.75. This isn't just hype without basis, in fact. Behind the scenes, Hyperliquid has been smashing volume and growth records. Recently, the platform logged an astonishing $29 billion in daily trading volume. Its total value locked TVL jumped from $460 million to $610 million in the last month, a 33% increase. Even more eye-popping, monthly net inflows exploded from $21 million in June to $349 million in July, over a 1,500% gain. Those numbers hint that big money is piling in. Several high-profile announcements reinforce the institutional angle. For example, Circle plans to enable native USDC transfers to Hyperliquid, and Anchorage Digital announced it will custody HYP tokens. In other words, both user activity and institutional validation are surging. On the chart, YPE reflects this. All major moving averages are pointing up. Golden alignment and momentum indicators like the RSI remain well below overbought, suggesting there's more fuel if demand persists. Technical commentators note that if HYP can finally vault above its $49.75 ceiling, the next stop could easily be $54 or $55 with some resistance at $52. This dream scenario, a breakout into true price discovery, resembles Ethereum's march past $5,000. Indeed, Crypto Potato even speculated targets of $54, $60, and $66 for HYP once $50 is flipped into support. Given the level of exchange, volume, and institutional flow, it's plausible that momentum buyers could carry it that far. Yet HYP is emblematic of higher highs, higher risks. Being so close to an ATH after a monster run means any stumble could trigger a sharp sell-off. Technically, the token faces a brick wall at $49.75. A failure to pass this level again could flush out buyers. The analysts at the Tradable note that on the downside, the strong supports lie back at around $45 and especially $42, where the 20-day IMA sits. In practice, we've seen HYP whipsaw wildly in 1 day's fireworks. It jumped 19%, and within days, it can give back double-digit percentages. Moreover, smaller cap tokens like HYPE tend to be less liquid. A large order or negative news could rapidly move the market. By contrast, if something dramatic happens at Hyperliquid itself, say a security issue or regulatory snag, it could spook holders. At this point, IP's key question is simply whether demand outpaces profit-taking. If it breaks through $50 and stays there, the bullish case is reinforced. But if bulls falter at the threshold, HYPE could slump quickly to the cited support levels, turning this run into a classic pump-and-dump scenario. In summary, the altcoin space is undeniably hot right now, but it is not without flytraps. Every coin we've discussed is perched at a make-or-break juncture. On the upside, charts and on-chain metrics are aligned in bullish patterns. DeFi activity and TVL are rising. Speculative positioning is heavy on longs, and major resistance barriers are being tested or cleared. These signals suggest that if momentum holds, we could indeed see new record highs in several tokens. On the downside, the risk of a sudden shift is equally high. Many traders have already signaled fatigue and started to lock in gains. Key supports like $4,500 on ETH, $3 on XRP, 80 cents on ADA, $186 on SOL, and $45 on HYPE have not all been decisively retested yet. A failure at any one of these could cascade into a broader setback. Macro factors add another layer of caution. For example, if inflation data surprises or regulatory concerns flare, crypto could cool quickly. Veteran investors know that market euphoria often peaks at the strongest hype, and while the fear of missing out can drive prices through roof, The ensuing fear of liquidation can bring them down just as fast. In practical terms, those looking at these altcoins should move with conviction, but also manage risk. Setting stop losses below critical support levels is prudent, and taking partial profits at strength can lock in gains in case of a pullback. Diversification and position sizing become important when volatility is this high. Overall, the data say the bulls are in control right now, but only just. If the buying pressure continues, expect we'll see new all-time highs for some of these coins. If it lets up, we could be due for a sharp rotation. Either way, the market is telling us the story. We are at a crossroads, where either the records keep tumbling, or a high-velocity correction accelerates. Careful attention to the charts and to the emerging price data will be key in deciding which path unfolds.